Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today's Friday, November 28, 2008. There was a slew of data released from Japan showing the economy slipping into deeper recession. Japanese households saw another weak month of spending, which was down 3.8% in real terms on the year in October. It's the 8th month in a row that households have cut back on their spending. Retail sales, meanwhile, declined 0.6% on the year, which was smaller than forecast by economists. However, it's the second month in a row that the sales figure has been negative and adds further evidence to the downside risks to the Japanese economy. Next, Japanese companies cut industrial production by 3.1% in October, preliminary data for the month showed. With domestic spending falling and exports down 7.7% last month, Japanese firms are cutting their output in response. A second release showed the manufacturing PMI index fall to 36.7 for November compared to 42.2 in October. It's the 8th month in a row that the manufacturing sector has been in contraction. Japanese consumer prices cooled to an annual rate of 1.7% for the October period from 2.1% in September. The main catalyst was a fall in oil and commodity prices, which helped beleaguered consumers facing recessionary conditions. CPI excluding fresh food was at 1.9%. In monthly terms, prices fell 0.1%, and prices excluding food were down 0.2%. The unemployment rate in Japan surprised forecasts as it fell to 3.7% for the October period, lower than the 4% seen in September. However, the labor force participation rate fell by 0.5%, so that means more Japanese workers stopped looking for work and were taken out of the headline level. In the Eurozone, the flash release of consumer prices for November saw annual prices plunging to 2.1% from 3.2% in October. That drop is the largest in almost 2 decades and larger than forecast. And it also reflects a change we're seeing in the major economies where lower commodity prices and weaker economic activity is pushing down prices that have been surging earlier in the year. The data gives the ECB more room to cut rates going forward as inflation eases. Also, the unemployment rate in the Eurozone jumped to 7.7% in October, the highest level it's been since January of 2007. The data follows other reports this week showing economic confidence down to a 15-year low and retail sales figures the worst in at least 5 years. The euro-yen pair fell in today's trading as the data coming from the Eurozone will pressure the ECB to lower rates in order to ease borrowing costs and spur the economy. With inflation easing as well, the ECB has more leeway to make bolder cuts if necessary. The pair fell 260 pips in favor of the yen from the intraday high near 123.40 and puts the pair back to its level where it started the week. The euro was also weaker against the dollar, with the euro-dollar pair sliding 300 pips from its intraday high near 1.2950 to support at 1.2640. Traders may be betting on stronger interest rate cuts for next week's ECB meeting than they had originally estimated. Turning to the UK, the retail sales index put out by the CBI plunged to a 25-year low in November as consumers cut back spending in the face of a recession, falling housing prices, and weak stocks. 46% more respondents said sales were lower compared to a year ago than those that said sales were higher. Stores will be discounting heavily, and the government is passing a plan to lower the sales tax in order to encourage people to go out and shop. The pound-dollar pair fell overnight in favor of the greenback but recovered in New York trading. Most pairs not involving the euro were relatively quiet overnight, sticking to predefined ranges. In Canada, the Industrial Product Price Index remained unchanged from September as the strong decline of the Canadian dollar canceled out the negative effects of falling prices for refined petroleum products. However, the substantial decrease in prices for mineral fuels was a major factor for the 12.5% drop in the raw materials price index. The US dollar-Canadian dollar pair rose slightly today to test the 1.2465 area, the third day of increases in this pair. However, today's high was a key level of resistance and the pair fell back towards its open. Next week starts with manufacturing and inflation data from Australia, retail sales from Germany, reports on manufacturing from the UK and the US, and Canadian GDP figures. Monday night, the Reserve Bank of Australia is expected to cut rates by 75 basis points to 4.50%. And that wraps up this week in the Forex markets. Thank you for joining us here at cmsfx.com. and have a great weekend.